To the currency, where the rupee falls in thin trade as was trading weak against the US dollar in ahead of the Reserve Bank of India's mid-quarter policy review tomorrow. Trade was thin as dealers avoided taking fresh dollar positions ahead of RBI policy and also as many bankers were on leave for Christmas holidays. Besides the RBI policy, traders are also awaiting cues from the US Fed two-day meeting which ends later tomorrow. Expectations are that the Fed will give clues on tapering its $85 billion a month bond buying program. Since the month of Jan this year, the rupee has weakened 11.11% till time. Let's get in then. Mr. Satyajit Kanjilal, he is CEO of ForexServe and he joins us live for the segment as well. Mr. Kanjilal, hi, welcome. It's going to be an eventful day tomorrow with Fed and the RBI policy meets there. What are you expecting from both of them?
Hello Manisha. The market obviously has discounted the worst possibility, which is obviously the RBI, given what they have been doing recently, they've been very averse to inflation. So people are factoring in a small rise, if at all. That is what the bond prices are indicating. On the other hand, the stock markets also therefore have dipped, and which has also not allowed the rupee to strengthen despite the flows we have seen in the last few days. So on the front of the Federal Reserve, of course, it is not a done deal yet, but many people believe that, as you were saying initially, that they will give some clues, but people expect them to do something later than sooner. So obviously till March, the decision will be taken at some point of time, but the extent to which they will do, maybe they'll give some clues, and their assessment of the economy, given the good set of data we see coming out over the last few months. So the rupee may, in that scheme of things, be again, as we mentioned earlier, in a range rather than a trend at this point of time.
Mr. Kanjilal, just taking two views here. If the RBI monetary policy to start with just does see a 25 basis points of an interest rate hike, would you say that that has been pretty much factored in by the markets?
I think that has been factored in by the markets. It has definitely been factored in the markets, because if you see the Government of India bond prices, you see the OIS curve and the IRS curve, all have moved up significantly in the last few days. As so has the US dollar, so the interest rates also. So therefore, I think it has been factored in, and this is what I would assume.
And there also has been statements, Mr. Kanjilal, from the RBI governor that if a tapering news does come in, we are in a better position right now, and perhaps a bit of that also has been factored in. Would you be surprised if we hear something like $10 or $15 billion being tapered from perhaps first quarter of 2014?
Well, I think that wouldn't be something of a surprise to me, but it will be a surprise to the market, which is not yet expecting that. So I would say that they might do that. And in that case, what that will mean is that not immediately higher interest rates, but it will definitely have an impact on liquidity, which is going to affect the flows, and the markets are going to perceive that as negative for the rupee. But as the RBI has mentioned that they're in a better position, so with the read into that, it will mean that between 61.50 to 62, they definitely have been buying dollars. That's been the floor that we have been speaking about. And, euphemistically, we have been talking about OMS, oil marketing companies and others buying, but it could have also been the RBI shoring up their reserves, which they might be able to use in the event that you see the rupee going over 63.50. So I think this band that we are looking at is between 61 and 63.50, which the RBI would like to maintain as an equilibrium level as one sees at this point of time.
Vijay, getting you in the conversation too, how are you reading on charts a 0.5% decline for the rupee, and how have the volumes been ahead of the policy meeting tomorrow?
Manisha, yesterday and today the volumes have shrunk, and basically I think the outlook that I have been advocating remains unchanged. The appreciation potential for the rupee remains limited to 60.80 in cash, which would mean somewhat closer to 61 in the currency derivative segment prompt month futures. On the other side, I don't expect the dollar to go past the 63 quarter. And as far as the % hike is concerned, I would largely agree that the market is sort of reconciled to that fact. And if at all that development does occur tomorrow, I don't think it would ruffle the feathers of too many currency players on an intraday basis.
Vijay, that's about the rupee. It also is the Fed monetary policy announcement tomorrow. Ahead of that, how are you looking at the euro and the dollar index performing?
Manisha, I think while the tapering probability has been in the public domain, the markets are not completely reconciled to that. So as and when it does occur, it will create some ripples in the market. And I think emerging market currencies will be at a disadvantage in that case. The easy money policy, that open tap of the Fed is likely to be basically limited marginally, and that would see funds going into the US markets as a sign of confidence, and the rupee is likely to weaken against the dollar. As far as the euro is concerned, over the last couple of trading weeks, I've noticed the action is shifting to the euro because the euro INR is the second most heavily traded currency pair after the USD INR on the Indian exchanges. And there has also been noise about how the eurozone is showing early signs of recovery. So the euro is likely to, in all probability, outperform the USD INR. And as and when the tapering does occur, I think the rupee will be poorer for it.
All right, so that's the view coming in from our experts on the currency space ahead of the two most important crucial event data tomorrow, one the RBI policy and of course the Fed policy meeting announcement as well. But with that, Mr. Kanjilal and Vijay, we'll let you go. Thank you so much for joining us.